Joining me now is Stephen Orr. He is the CEO and founder of Quasar Markets. Stephen, welcome to the New York Stock Exchange.
Thanks for having me, Ashley. Good morning.
Good morning. So let's get right into it. As I reported just a moment ago, NVIDIA, $100 billion into OpenAI's data centers. What impact do you think that this can have on the broader AI market?
Oh, I think it's great. It tells you that AI is definitely on the forefront. We're not stopping on AI. Just a few months ago, we had, Oracle and Jensen Huang got together and they had a big deal as well. So I think they're building an ecosystem around AI, and it puts the pressure on other companies to also push up their AI as well.
All right, and the Fed also in the headlines in the past few months, but Powell is saying there is no risk-free path. Can you elaborate on that?
The quote that he made was risk management cut, and I didn't really understand what that meant. Is it a one and done? Is he saying more? There's a big argument for the first time, I think, within the Board of Governors of what they're going to do in the future. Some are saying let's cut more, let's cut less, let's not cut anymore, we're good to go, a risk management cut. Look, I think the Fed's concerned. I mean, we have a big issue right now where job losses are picking up, inflation is still nasty, and that portends to be a stagflation. So we're not in a good situation right now.
And what are the potential implications of supply and demand weakening simultaneously?
Yeah, when inflation goes up, it costs more for the goods, right? Also, we have the tariff issues, so import costs have gone up as well, and export costs have also gone up. So that's putting a big damper. I think the numbers are going to look out for the PCE this week. I think that's going to be a big telltale sign if inflation is still hurting the consumer. We also have consumer sales numbers as well this week, so we'll also get a good feel of how they're feeling about the economy as well.
You've said that hope is not a strategy. Can you talk about how you think investors should play this market right now?
Yeah, I mean, look, it feels like we're on The Price is Right, where the mountaineer's going up the side of the mountain. You can't figure out when to sell, right? And it keeps going up and up and up. And right now, I don't like buying stocks when they're on highs like this. There's this hopium going or running around the markets right now, and it has to be a pullback. And I've been calling for a little bit of a pullback here, more than a pullback, probably between about 12 to 17%.
All right, and you mentioned stagflation earlier. Can you define this term for us and talk about the impact that you think it's having on the markets?
Well, stagflation is when the inflation is continuing going up and when people are losing their job. So that's a very bad situation. This is not like deflationary experiences. But what happens is that people don't have jobs, so they can't afford things, and inflation is going up. Go to the grocery store and see what your costs are going in the grocery store, right? That's a problem. And so when sales start to go down, margins start to hurt, and then companies can't make as much money. And then all of a sudden that starts to seep in. But you don't see that for 3 to 6 months before it hits into the markets. So this is what I'm saying. There's a separation here that people don't really understand.
All right, and current economic conditions, how do they compare to the 70s, the 90s, 2008? How are we looking?
Well, the same thing. In the 1970s, we had the same thing. We had inflation going up, and we had people that couldn't afford jobs, and of course, we had President Nixon. So there was a really telltale sign that, hey, things weren't that great, and people are starting to feel that way now. But when I look at the markets, it's not the same as Main Street and Wall Street. There's a separation, right? And we had a Republican president, and also the last time was in the 80s when it happened, right? And with Reagan was the same president. Inflation was going up. He was trying to fight inflation. It was the big thing, whip. And so now we have the same situation going on, whereas commodities are pushing up. But the commodity that's not pushing up is oil. But the other commodities like gold and silver almost making a new high. Gold made another new high. So these commodities are going up, but there are some commodities that aren't feeling the pressure yet. So why I'm saying that is because you have an opportunity to buy stocks that are still in that frame, meaning like Occidental, oil companies, energy companies that are still not quite there, that have been beaten up because of the oil prices. I think we're at $62.50 right now on WTI. So we're still a little bit lower on that commodity, but the rest of the commodities are pushing up. Look at copper, still making highs. Lumber had just dropped off, but could push up too as we build in the home building again. If people are feeling better about homes, we'll see how DHI looks, Adana and look. The other companies in the building industry like Home Depot and Lennar and Toll Brothers. So those are the ones I'm kind of looking at right now.
All right, and given all of the volatility and everything that's going on, how are you advising clients?
Well, I'm not sitting on the sidelines, right? I have protected myself quite a bit with volatility, VIX calls, and things of that nature. I'm also watching for the markets, and I'm moving a little bit. About 6 months ago, I moved into international stocks, so like say Japan and Europe, Germany. Those stocks have already pushed up as well. So I'm taking some of that money off as well. I'm only pulling back myself because I am going to buy the dip like everybody else, but I need to see that dip before it happens. When the markets push like this, it bothers me a lot. And usually when things bother me like this, it's usually when I take my money off.
All right, and in our last 30 seconds, is there anything that might be under the radar right now that you are following?
Yes, there's two things. Number one is robotics. I think robotics is the next big thing. And I also think that quantum computing is also a big thing. If we look at what Oracle is doing and what NVIDIA is doing and OpenAI, they're going to need massive amounts of energy. We know that. And we also know that they're going to have to be more efficient in how they get the energy. I also think nuclear is a big issue right now. I think we're going to see the nuclear power plants everywhere soon, the building of that. I mean, if I could say anything, the thing that I would fix right now is the refineries. We need a situation right now where we have lots of oil, but the refineries are now where the stopgap is. And so we need to fix refineries as well if we're going to go that direction. But yes, oil, again, gas, we're going to have a situation with quantum computing. And of course, the next level of all of this is OpenAI and how AI affects us in the world here.
All right, Stephen Orr, President and CEO of Quasar Markets, thank you so much for joining us at the New York Stock Exchange.
Thank you, Ashley.